this can actually become a company that is above the threshold of roughly 10 million in sales and above the threshold of roughly 2 million in profit. And at that point, there's a whole new group of people who are interested buyers. What if you sell the business? Well, we're buying businesses now, and we're buying them typically under market value. But as you saw, even if we paid market value, we can still make money. But what if we sell and we sell with an exit, right? There's a ton of money that's out there, almost $5 trillion on the sidelines, ready to invest when deals make sense. And you'll see this. Apple accumulated a ton of cash, and they recently did a lot of acquisitions, I think, in the AI area, and spent down. I think they've got about 68 or 70 billion now in cash. Buffett, last time I looked, had almost 200 billion. Maybe he's got more now. But they do that so they can do acquisitions. And who do they buy from? They buy from people like us, right? Now, to kind of get you familiar with how exits work, let me talk about the exit multiple landscape. Okay, on the left, you'll see there's a blue box, and the blue box is basically owner-operated businesses. Owner-operated means that the owner actually has to show up and do something in the business, and if she or he does not do that, or they, I guess, don't do that, then the business is going to suffer. That's considered owner-operated. They sell for less than businesses that are not owner-operated because whoever buys the business either needs to replace the owner or they've bought themselves a job. And there's some risk in the transition of the owner into a professional manager. There's about 30 million businesses that fall into this owner-operated category in the United States alone, and even more in the UK, Europe, and Australia and Canada. These businesses typically are doing under 10 million in sales. They're doing typically under about 2 million in profit, and they are owner operated. And they're going to sell on average. The most recent data tells us those businesses are selling across all industries. Some are higher, some are lower, but across all industries for 2.2 times their profit. Now, when you move from the blue box to the green box, you are getting into professionally managed businesses. They're the same size as the blue box companies. They're still typically under about 10 million in sales, although they can go significantly higher. And they're typically under about 2 million in profit, although they can go significantly higher. There's only about 3 million of these businesses that are doing above 10 million in the US, and obviously more in the other countries. And those businesses are typically going to sell for 4.8 times. Now, that's more than double the blue box owner-operated companies. So I'm guessing that those of you who are savvy are saying, hey, wouldn't it be interesting if I could buy a business that was one of these blue box companies and get a professional manager and have it be worth twice as much or a little bit more than that? And you're absolutely right. That is one of the strategies that we use to make money on the exit. Because even if we bought the owner-operated thing and all we did was install professional management and leave them in there for maybe a year, then we're going to get a significant bump in value. So that's one of the exit plans, is buy blue box companies and put professional management in and sell them as green box companies. Now, here's the cool thing, though. If you hang on a little bit longer and grow that company, either organically or through brilliant marketing or just buy more companies, then this can actually become a company that is above the threshold of roughly 10 million in sales and above the threshold of roughly 2 million in profit. And at that point, there's a whole new group of people who are interested buyers, as long as it's professionally managed. These are what we call the red box buyers. The red box buyers are going to pay, on average right now, 12.3 times profit. So you're going from 4.8 to 12.3. If I just knock off the end numbers and go from 4 to 12, that's a 3x bump in the value of the company by getting those sales up into that 10 million and profit up into that 2 million range. And it's a almost 6 times bump from owner-operated 2.2 value blue box company. So this is the whole kind of ecosystem, the landscape of these multiples. 2.2 for owner-operated, 4.8 for professionally managed. When we get over 10 million in sales and 2 million in profit, think about 12.3. These buyers are private equity companies, big corporate companies that are buying high net worth individuals, family offices, that kind of thing. And then don't worry about them though, because I know you're saying, gosh, how do those big hedge funds and private equity companies make money? I don't want them not to make money. Maybe I should sell for less. No, you don't have to, because they go public. And the last time I checked the NASDAQ stock exchange in the United States, those companies are trading at about an average of 42 times earnings. So about 20 times higher than the blue box company, right? And so on and so forth. And what is it, about little over 3 times the value of the red box companies. So that's it. We want to be in the blue and the green. We want to sell to the red and let the reds make their money in a whole different game, selling to the golds and going public. That's kind of how we make that exit money.